I sold all my cryptocurrency prior to day one of the administration because I didn't want to even have the appearance of a conflict.
So right after David Sachs announced that he sold all of his crypto, he became the White House AI and crypto czar. And there's been a lot of controversy that's going to ruffle some feathers about this guy in this video for not only why he sold his crypto, but what he had to say about Cardano, Solana, XRP, and how the US government crypto holdings will be audited to find out what digital assets we actually have because they don't even know. And Linda P. Jones took to Twitter and responded by saying the XRP assets in the stockpile will come from the judge's ruling of the $125 million fine paid in XRP. And the US Treasury will take over from the Fed, which will be monumental. On top of that, we have to discuss what's happening with tariffs in Canada, Mexico, the United States, what effect this had and will continue to have on the crypto market, specifically for XRP, and also every single other altcoin that you hold in your portfolio, and how effed up it is that if the US charges tariffs on other countries, it's okay for these other countries to charge tariffs on us, which is completely outrageous. So with Donald Trump in office, he's saying that stops now. All of these countries taking advantage of America ends this year. So watch all the way to the end of this video and you're going to have a solid understanding of what tariffs actually are, the impact that they play on the crypto market, what Fed Chair Jerome Powell has to say about tariffs and inflation, expectations for inflation in the crypto market the rest of this year, and also what a Rothschild had to say about the price of XRP after it gets backed by gold that you need to know, on top of some massive regulatory developments that virtually nobody is talking about right now that is going to completely change the game if you hold XRP or any other altcoin. So if you're feeling bullish, comment 777. If you're feeling blessed, comment 777. And if you're going to become the first millionaire in your family tree, confirm it by tapping the subscribe button. Let's run it. April 15th, 2025. This is a huge date because it's the deadline for 2 high-paying tax credits that you probably haven't heard about, but you can still get if you take action right now. We've partnered with the relief consultants who are experts in the tax code who've recovered over $100 million for their clients so far. So if you're a business owner or an entrepreneur, listen up so we can get you help and reach our goal of recovering $10 million for the Bull Runners community before the April 15th deadline. So here's how it works. If you're a business owner who had employees in 2021, then you qualify for an average $150,000 check from the Treasury and possibly more with the Employee Retention Credit Program. So if you were told in the past that you don't qualify, get a second opinion now through the link in the description below this video, because there are rules and regulations that have changed just recently. So there's a high likelihood that you do qualify now. And if you sold your business or you shut it down, you still qualify as long as you were active in 2021. So don't miss out. Schedule an appointment with the link below. Just click business owner with employees if it applies to you. There's also a second tax credit that also ends April 15th. So this is for the bull runners who are self-employed in 2021. So if you were a 1099, not W-2, and self-employment was your primary income, the Treasury check for this tax credit can go up to $32,220 with an average of $17,000. So if you were self-employed in 2021 and want to see if you haven't claimed this credit, which nobody has from our community thus far for some strange reason. We've been talking about this in several videos. I don't know, man. Maybe you just want the Treasury to keep your money. But if you want to get money back in your pocket, then schedule a consultation. Don't be lazy. Do this right now before April 15th through the link below. Just click self-employed if you think you qualify for both credits. Let the rep know on the call. And by the way, if you have your tax returns from 2020 and 2021 for this credit, it will be a faster turnaround for you. So have them ready on your call, and they can literally tell you if you qualify on your first call to get you paid. So if you need more money back in your pocket for this bull run, take action right now, click the link, and let's get you paid.
People came out right away and were saying that somehow I was engaged in a scheme to pump my bags or to basically create exit liquidity for myself and billionaire stuff like that. You have to understand that those accusations, I mean, they're accusing me of a crime.
A serious crime.
A serious crime, and they're doing it with no evidence whatsoever. So these things are basically, it's borderline slander and defamation.
It's slanderous, yeah, I would say so.
In any event, what they didn't know, and what I then proceeded to put out there, is that I sold all my cryptocurrency prior to day one of the administration because I didn't want to even have the appearance of a conflict. And by the way, I could have waited. I didn't have to do it like that, but I decided to do it and take it upon myself to do that because you just know that when it comes to crypto, there's going to be a lot of fluctuations in the market. You never want someone to be able to point at one of those fluctuations and say somehow that the cryptos are benefited from that and create a conspiracy theory, which is exactly what basically happened. So first of all, I got rid of all my cryptocurrency prior to day one. Kraft also sold all.
And Kraft is the venture firm that you funded that's done a lot of great work supporting founders here in Silicon Valley.
So we basically sold, I think it was around $200 million of crypto, of which around $85 million was personally attributable to myself. And we cleared that before day one, paid taxes on it, and basically so there wouldn't be a conflict. So then the smear shifted in another direction. It was, okay, well, maybe he doesn't own crypto.
Okay.
But he's in crypto funds. Okay. And so they pointed to, Bitwise and Multicoin Capital. And I was also in Blockchain Capital. And so then the fund managers came out and one by one all said, actually, David called us over 2 months ago and said he's going to need to divest from our funds. And so we also did that. So, I think basically they've kind of given up on this. But look, it's very easy for
why let the facts get in the way of a good slander?
Seriously.
And, full disclosure, you, when you saw me doing the Sequoia Scouts program, said, hey, why don't you do a fund? I'll be the anchor. I'll be your first LP. And I mean, one of the most generous things you've done in our relationship. And I had to have a call with you, weeks ago and say, hey, okay, you're going to divest. Okay, fine. No problem. No, it's not a problem for me. You sell the assets to somebody else. So the way people understand how this mechanically works, when you're in a fund, you have Sachs cannot tell me what to do in the fund. He just put money in it, like I put money in other people's funds. They go and invest, and 10 years later, you get a return. And hopefully that return in a venture firm or private equity firm beats the markets, the public markets, or whatever. But then you can also sell that interest to somebody else. So mechanically, and this discount, takes time. And you have to sell it at 50%, 25% off. And it's painful. You will lose, I estimate, you're going to lose, I don't want to be gratuitous here, but 8-9 figures by serving the country for a couple of years. And not only that, the great irony of this is the one thing holding back the industry is regulation, over-regulation of AI, and no clear regulation in crypto. You're going in to fix the two things that were number 1 and 2 on all of our agendas in Silicon Valley in terms of getting returns the next 4 years. So the sacrifice you're making is extraordinary. And you're making it a better environment, a regulated environment for the rest of us to do commerce. So I just want to point out that you're losing like double here.
Right. Well, let me just underscore something you said.
For your service. And I don't know how much they pay. How much are they paying you for this job? What do you get paid? Like 50 grand, 100 grand?
I'm an unpaid consultant to the government.
Really? Is that actually accurate? You get no money?
No, I don't want anything.
It's costing you money.
No, of course it is. But it's an honor to serve, and it's an honor to be asked to serve. And in particular, it's an honor to serve this president, because he really wants to make the country great again. So that's why I'm doing it. But yeah, look, I think it's a lazy and stupid narrative to say that the reason why someone who's already successful in business goes into government is to somehow make more money. I was making money before. This involves a substantial disruption of my business interests, and I have to divest a lot of those business interests. And in divesting, I have to be either a taxpayer or I have to take a significant discount, and it costs you money. So, it's just a lazy narrative that people create, but there's no truth to it. And just to underscore a point that you made a second ago, you were one of the funds I divested from, not because you're a crypto fund, but because you might have a crypto position. We went through, I think, the launch fund's holdings, and I think there was something crypto related in there. And
we have one or two that pivoted into crypto, yes.
Right. So I just didn't want to have any problem there. So
listen, this is the nature of the politics we have. People are, it gets very personal. You know that better than anybody. And so, that's why you're here.
So this clip from David Sachs was posted in response to what he said about ADA, Solana, and XRP. If you haven't heard that yet, here's a quick snippet from it.
Just going into what's in the holding of the US government, going back to what President Trump mentioned over the weekend, talking of Ripple, Solana, other alternative coins that people are wondering whether they're going to be included in this stockpile. Will they? Does the US own them? Why mention them by the president?
Well, the president just mentioned the top 5 cryptocurrencies by market cap. So I think people are just reading into this a little bit too much. He just mentioned the top 5. In terms of what we'll actually have, again, we have to do the accounting. We're not sure, sitting here today, whether the federal government owns any of these alternative cryptocurrencies. We know it owns Bitcoin. I believe it owns some Ethereum. I'm not sure about the other ones. This is why we have to do the accounting, is that, to be honest, no one's been able to give us a straight answer yet in terms of what the federal government owns. And this is part of the problem, is that we've never really had a digital asset strategy before. And this is why we've, missed out on accumulating a lot of value for the American people.
So because the government doesn't even know what altcoins they hold, I made a video yesterday asking, will Ripple hand over 45% of its XRP to the US government? Because we've seen a wide variety of people on Twitter talk about how they could donate part of its monthly escrow to the US government. Even lawyer Jeremy Hogan saying it is possible that Ripple could satisfy the judgment against it by transferring the same amount of XRP to a federal XRP stockpile address. And yet people put stuff in the comments like, can't watch clickbait titles, don't lie to us, which is genuinely confusing for me, because I don't know at what point in this video I lied to you guys when I'm reporting what very qualified people in the space like Jeremy Hogan are saying. And look, I get it. I can understand how some people don't actually read a title and they don't see the question mark at the end of the title and they think it's a statement. But I'm simply here reporting on the news, clarifying the facts, and delivering you guys with the information that I'm seeing to help you come to your own conclusion. So a lot of people, they don't watch the entire video. They just make assumptions based on a title that is a question. And because we get a lot of questions in these videos, we address them in the titles and in the content of the video. For example, a major question that people had was, did Donald Trump really have plans to add Cardano, Solana, and XRP? Or was he just mentioning them because they were a part of the top 5? Well, Linda P. Jones says she doesn't think David Sachs is walking back what Trump said about XRP. She thinks he is trying to unite the cryptosphere to get legislation passed, which is also what Brad Garlinghouse has been trying to do. The Bitcoin maxis are dead set against XRP or any crypto other than Bitcoin being a part of the reserve. So saying it was a top 5 asset was downplaying XRP to help pacify the maxis. The two separate reserve stockpiles are because the plans for the future of the assets are very different. In the Bitcoin reserve, you have the Federal Reserve waste pile where the fiat dollars will be discarded and will go to die. The digital asset stockpile is where the interoperable digital assets will be that will run the new financial system. The XRP assets in the stockpile will come from the judge's ruling of the $125 million fine paid in XRP. The US Treasury will take over from the Fed. The old Fed dollars will no longer be used, and a new Treasury note will replace it. This will happen globally, and each country will have new money from the Treasury, not central banks. They will have an asset-backed digital version running on the XRP ledger. And according to Jacob King here, Michael Saylor likely spent millions of dollars lobbying Donald Trump to say, never sell your Bitcoin. But instead, Trump responded by saying this.
Fortunately, in recent years, the U.S. government has foolishly sold tens of thousands of additional Bitcoin that were worth billions and billions of dollars had they not sold them, but they did sell them, mostly during the Biden administration. Not a good thing to have done. From this day on, America will follow the rule that every Bitcoin knows very well: never sell your Bitcoin. That's a little phrase that they have. I don't know if that's right or not. Who the hell knows, right?
So this was his reaction here. Who knows? Maybe he needs exit liquidity from retail investors that buy Bitcoin at the top so he can inevitably sell going into a bear market. So we'll see if Michael Saylor holds up to his word and doesn't sell his Bitcoin. But either way, David Sachs is saying the US government crypto holdings will be audited to find out what digital assets we actually have.
So that's the plan with the 200,000 Bitcoin that we believe are in the possession of the federal government. I say we believe because no one really knows for sure, because we never had a proper audit. So that's one of the first things that this executive order provides, that we're going to do a full government-wide audit to find out what digital assets we actually have, so they can be safeguarded and moved into a strategy that maximizes their long-term value.
So make sure you guys subscribe to the channel to see what comes out in that audit, because we're going to be covering it here on YouTube and also on Twitter as well too, when you follow us at Bullrunners HQ. Unfortunately, XRP didn't hit $5 by March 1st for our $100 XRP giveaway, but we decided to give away 100 XRP anyways to Zach Smith here on Twitter. And we're going to try this one more time. If XRP hits $5 before the end of this month, by April 1st, we're going to give away 100 XRP, which is $500, to another person who likes this post and is following us. So there's only 157 people that like this post. So worst case scenario, you take 30 seconds of your time to go and like the post and you don't win. You have nothing to lose. Best case scenario is you win $500 if XRP hits $5. And who knows, maybe if XRP doesn't hit $5, we might just give away 100 XRP anyways. So go give us a follow on Twitter, like that post, and hopefully you win. To summarize what happened yesterday at the White House Crypto Summit here from Yoni inside of Altcoin Pro University, it turned out to be more of a nothing burger, more so confirmations of existing policies than a game changer. Here's a few key takeaways. Trump's administration aims to use stablecoins to keep the US dollar dominant. A new government reserve will hold non-Bitcoin assets. So there's two different reserves here, one for Bitcoin, one for a stockpile of other crypto assets. And we're going to see what that audit discloses to see how much of Solana, Ethereum, or XRP will be added to it, on top of the fine from the SEC versus Ripple case for $125 million. Regulatory clarity is incoming, and they're pushing for stablecoin legislation to pass ASAP. They're ending Operation Choke Point 2.0. It could mean easier banking access for crypto companies. And on top of that, US regulators say banks can engage in crypto activities right now. So from fighting crypto to fully embracing it, the tide is turning right now. The Office of the Comptroller of Currency took action to reaffirm that a range of cryptocurrency activities are permissionable in the federal banking system. So they just confirmed that crypto asset custody, certain stablecoin activities, and participation in independent node verification networks such as distributed ledgers are permissionable for national banks and federal savings associations. So that wasn't mentioned at the White House, which is massive, but basically inside the summit, Trump met with all the industry leaders. They praised him for his support on crypto, and it just ended with no groundbreaking announcement. So despite all the hype, it was just basically a nothing burger. No new policies, no big surprises, just more of what we already knew. But still, the overall tone seems bullish, and the real discussions are likely happening behind closed doors, which is why they cut off the stream about halfway through. Now, here's some bigger piece of news that we need to talk about because this is directly affecting the crypto market, which is tariffs. Here's what Trump just said recently.
We're on time with the tariffs, and it seems like that's moving along very rapidly. We've been mistreated very badly by many countries, not just Canada and Mexico. We've been taken advantage of. We were led by, in some cases, fools, because anybody that would sign documents like they signed, where they were able to take advantage of the American people, like has happened over the last long period of time, except for a little 4-year period that took place 4 years ago. But anybody that would agree to allow this to happen to our country should be ashamed of themselves. No, the tariffs are going forward on time, on schedule. This is an abuse that took place for many, many years. And I'm not even blaming the other countries that did this. I blame our leadership for allowing it to happen. I mean, you know, who can blame them if they made these great deals with the United States, took advantage of the United States on manufacturing, on just about everything. Every aspect that you can imagine they took advantage of. I look at some of these agreements, I'd read them at night, and I'd say, who would ever sign a thing like this? So the tariffs will go forward, yes, and we're going to make up a lot of territory. All we want is reciprocal. We want reciprocity. We want to have the same. So if somebody charges us, we charge them. It's very simple, but it'll be very good for our country. Our country will be extremely liquid and rich again.
So if we look at the XRP, the US dollar price chart, initially when Trump considered a 10% tariff on EU imports, the markets completely freaked out and XRP dropped over 40% over the course of 24 to 48 hours, which is absolutely insane. The price tanked from $3 all the way down to this massive wick to $1.76. And it was bought up quickly, which shows there's very strong demand for XRP around the $2 region. But that video clip you just watched was posted February 24th. And as you can see, when that news was announced about them moving forward with 25% tariffs on Canada and Mexico, XRP dropped 14 to 15%, and then subsequently 4 days later bled out 24%. So we can see diminishing marginal impact on the sell-offs because people are now used to this. So because the tariff news were not enacted on February 3rd, it was just a consideration, most of that negative impact to the downside was already priced in. So we see this happen time and time again in the markets where major news gets announced for the first time and the markets freak out because it creates uncertainty. And then once there's more certainty, then the markets react less. And we just see XRP coiling up right now. So we're going to get into the end of this video, the expectations over the next few weeks, and even the rest of this bull run. But if we look at total 2, which is the crypto total market cap excluding Bitcoin, what happened right here was pivotal on February 3rd when Trump announced that he was considering tariffs, because the market was attempting to hold this support on a previous range high that we got slapped back from on the 12th of March, and it couldn't do that. So the tariff news has been creating a lot of uncertainty about what's happening next in the market. And so with total 2 just hanging out at around $1 trillion right now, this is going to ruffle a lot of feathers here that don't truly understand what's going on, because Canada, Mexico, and China already had tariffs on the United States before Trump made these announcements. For example, Canada had a 25% tariff on steel, 10% on aluminum, 7% whiskey, 10% on prepared foods, 8% wool, 3% on specific pumps, 5% on certain chemicals, 6.5% on machinery parts. And then Mexico had 20% on pork. Then you got cheese, steel, apples, chemicals. So China had 25% on soybeans and on automobiles. And on virtually everything, these countries have been taking advantage of the United States. So for people that aren't paying attention to this, here's a list of the most outrageous tariffs Canada imposed on the USA. 263% on chicken, 179% on turkey, 175% on butter, 165% on dairy, and the list goes on with fish, milk, cheese, beef, pork, eggs, flour, wheat, orange juice, peanut butter. So it's no wonder why Trump is blasting the European Union and other countries for their tariffs on America, because it's been a one-way street here where they can take advantage of us here in the United States, when in reality, it just simply needs to be fair trade.
Our country, from an economic standpoint, a financial standpoint, and a trade standpoint, has been absolutely ripped off by almost every country in the world. Canada, Mexico, and then you just go right down the line. India charges us massive tariffs, massive. You can't even sell anything into India. It's almost restrictive. It is restrictive. You know, we do very little business inside. They've agreed, by the way, they want to cut their tariffs way down now because somebody's finally exposing them for what they've done. And same thing with China, same thing with a lot of other countries. And the EU has been a terrible abuser of this country. I mean, the EU was formulated in order to take advantage of the United States, and they have taken it, but they're not taking advantage when I'm in charge. So sometimes you'll hear some negative things. It's always from outside countries. America will be very strong. And, you know, if I'm a foreign country, they're going to do fine, but they can't do like they used to do, because we're going to bring back our business into this country. We need it from a job standpoint. We need it from even just a psychological standpoint. Think of it, 90,000 factories are gone since the beginning of NAFTA.
So with this tariff war going on, here's exactly how tariffs get passed on to the end consumer, you and me. And I thought this is a great video from Learn to Invest on YouTube here, but I'll play this 2-minute clip for you guys to better understand this.
A tariff is essentially a tax on goods and services that are imported. The purpose of a tariff is generally to protect the product or service that is domestically produced. Here are the basics of how a tariff might work. Let's imagine that country A produces widgets, and country B produces similar widgets. Country B is able to produce their widgets for $10 each, while in country A it costs them $14 to produce their widgets. Well, in an effort to get more business, the manufacturers in country B decide to sell their widgets in country A for just $13 a widget. As you can imagine, this isn't good for the manufacturers in country A. Now they can't sell their widgets for a profit. Well, business begins to slow for the manufacturers in country A, and because business is slowing, they must let go of some of their workers. Well, the government in country A doesn't like this, so they decide to impose a tariff on all widgets that are imported into country A from country B. They are going to charge $5 per widget to all imports. Well, now the manufacturers in country A are thrilled. They can sell their widgets for, let's say, $15 a widget, and the competitors in country B can't beat their price. So that is essentially how a tariff works. Now the real question is this good or bad? Well, for the widget manufacturer in country A, it's a great thing. They were losing money before with no real way to compete, but now they're selling their widgets again for a profit, and they can hire again, and their business is growing. So what about potential negatives? Well, one potential negative is retaliation by country B. Perhaps country B is upset by this widget tariff, and perhaps they put their own tariff on, let's say, chickens that are imported into their country from country A. And also, let's imagine that there's a lot of chickens that get shipped from country A to country B. Well, this could be the beginning of a trade war. And although it often takes a long time for trade wars to play out, there tends to be many losers and only a few winners in a trade war. Another consideration is the end user. You might hear an argument saying something like that country A manufacturers were taken off the hook. Instead of country A manufacturers having to innovate or cutting costs to compete with the manufacturers in country B, instead the government stepped in. So what about the end user? The people or companies that bought those widgets before used to pay just $13 per widget, thanks to the imported widgets. But now it's costing them $15 a widget, which makes their expenses higher. So are tariffs good or bad? Well, you decide. since it seems that the answer to that question depends on who you ask.
So in the short term here, this causes shock in the market, uncertainty. The markets definitely don't like uncertainty. But in the long term, this could be good. Listen to what Jerome Powell had to say about Trump's tariff remarks during his recent speech at the University of Chicago.
We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. Uncertainty around the changes and their likely effects remains high. Policy is not on a preset course. If the economy remains strong but inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our mandate.
So to summarize his entire speech, he talked about conventional view on price spikes. If tariffs cause one-time spikes in prices, the Fed won't typically react with policy changes or interest rate adjustments, as it would reduce unemployment and economic activity unnecessarily. The Fed would look through such temporary effects. Number 2, uncertainty around tariffs are still unclear, and the effects on importers, retailers, and consumers will only become evident over time, because this just doesn't play out over a 24-hour period. This needs to be signed into effect, and then it takes a long period of time to take place. So the price action on the charts is not based on the actual event, it's just based on the words. So think of the markets like an overly emotional teenager that react to their parents saying you need to clean their room. So number 3, when tariffs might matter, the Fed would pay closer attention if tariffs lead to persistent inflation, larger than expected price increases, or shifts in long-term inflation expectations, because their goal has been to return to the Fed's 2% target after a period of high inflation that we saw back in 2021, 2022. And number 4, broader economic outlook, because tariffs are just one part of the economic picture. Other factors like growth and policies, like tax cuts, immigration changes, regulatory shifts under Trump, are also going to massively influence the Fed's decision to adjust interest rates. And number 5, gradualism. While uncertainty is high, Powell favors cautious, gradual approach to policy changes. So it's going to be in response to inflation and unemployment as a part of their dual mandate. So if we look over the past year for United States inflation, we can see since September 2024, inflation has risen from 2.4% to 3% in January. And February's numbers should be coming out here soon. So if inflation continues to tick up, they might keep interest rates higher for longer. Now, one thing that's important to know is if we look over the past 5 years, you guys can see back in 2020, right into 2021, inflation started to spike from 1.7 to 2.6. And then by April, it was at 4.2, 5%. And it got all the way up to 9.1% by June of 2022. So if I bring up the chart for you guys right here, you can see after COVID, when inflation was all the way down here, very, very low, it rose after that alongside the bull market. It wasn't until the bull market peaked out, inflation continued to the upside, well then the market started to sell off. And it wasn't until like June that inflation dropped while the market was almost virtually at a bottom. So while inflation goes up, that's actually shown that it's been good for the crypto bull market as we look at last bull market cycle. So where's inflation right now? Well, inflation is relatively low at just 3% compared to what it was back here by April of 2021 at 4.2%. So if inflation starts to tick back up again, in my opinion, that would be good news for the crypto market, because inflation gets higher, cost of goods and services and grocery stores go up. If the tariff war continues, then where do you think the wealthy are going to start moving their money? And even average everyday Americans, they're going to start to realize that the only way to beat high inflation is to invest. Where are they going to invest? Well, they're going to invest in the asset class of the future, which is the crypto market. Look at what Trump has been doing recently. I mean, he just hosted a crypto summit at the freaking White House, guys. So the net verdict here is in the short term, it's probably neutral to bad, obviously, because of the uncertainty that this creates, but the diminishing returns or the diminishing effect of the sell-offs as the market's already priced it in. In crypto, I think that's just going to get less and less and less as people get numb to the tariff news. But the bad news is this causes higher costs for mining hardware and an economic drag that could outweigh any flight to safety bump. and everyday consumers are going to have to spend more on these goods and services. In the long term, though, it could be potentially good if tariffs erode trust in fiat currency, the US dollar, or disrupt global finance enough. Crypto's appeal as an alternative would grow. So it's a mixed bag, honestly, right now. Crypto is too detached from physical trade to field tariffs directly, other than just the words that are spoken, but it's not immune to the economic chaos that can be unleashed. So Elon Musk posted this back in 2020 asking, what can't we predict? And Nathaniel Rothschild said the price of XRP after it gets backed by gold or will be a part of the SDR. And so you can tag Grok on Twitter and say Grok and then ask it a question. So I asked it, who is Nathaniel Rothschild for everyone to know? And Grok said, he's the 5th Baron Rothschild, born in 1971. He's a British financier, inherited the Rothschild banking family title after his father Jacob's death in 2024, known for his role in global finance. He's tied to the famous Rothschild dynasty. And if we just ask Grok, who are the Rothschilds and what's their net worth? Well, they are the wealthiest Jewish family originating from Frankfurt, Germany, whose documented history goes back to the 16th century, guys. So if one of the Rothschilds is saying XRP is going to get backed by gold or will be a part of the SDR, and the Rothschild family is the wealthiest Jewish family in the world, the Jews run the world, they established a banking business back in the 1760s, and Mayer Amschel managed to pass his wealth to his 5 sons, who set up banking operations in major European cities, Frankfurt, London, Paris, Vienna, and Naples, that created one of the first international banking networks in the world. And this grew significantly during the 19th century, where the Rothschilds were believed to possess the largest private fortune in the world, guys. So I don't know, you tell me, why would one of the Rothschilds be saying this in response to Elon Musk if he didn't know something? So the writing is on the wall here. XRP is one of the chosen ones. Now, what other projects should you have on your radar this bull run while we watch for Total 3 to break out with global liquidity M2? Let's look at the chart here, because I showed this in my previous video yesterday where we talked about the halving cycle theory based on sine waves. We also discussed some major key indicators on the charts that are showing us where we are in this market cycle. I broke down the relative strength index, the stochastic RSI, and the MACD in regards to this chart. So you definitely want to watch that video after this one, because as you can see back here in June of 2021, when the C wave was in, after crashing from nearly $1 trillion down to $400 billion, the altcoin market took a period of time to break out of this consolidation period right here. But when that breakout happened, we rallied all the way up to the all-time high, which in my opinion, I believe is coming next for the altcoin market based on every single chart that I've seen thus far. Now, it doesn't mean we're out of the woods just yet. It doesn't mean we can't sell off further to the downside. That's definitely possible. But if that were to happen, that would provide the best possible opportunity to back up the truck all the way to the bank, grab the bags, pack them and stack them, and look for the altcoins of the future to be able to get the best possible entry points. And if you want to know how you can be able to do that, then you can get started with Altcoin Pro University through the link in the description below. And if you want to become an affiliate to be able to earn even more passive income on the front end by sharing Altcoin Pro University, then drop a comment on this post right here that I made about 20 hours ago. Who knows, maybe we'll open the doors for an affiliate program beta test group based on what you all think. After you go through all of the education inside the classroom to learn about crypto foundations, the building blocks of Web3, crypto security, DeFi, researching altcoins, structuring your portfolio, crypto taxes, the list goes on and on and on. On top of top altcoin picks from our research team that have the largest potential for massive adoption. For example, our team even said Solana is most likely to be one of the easiest trades next year, and this was posted December 29th, 2022, on the day that Solana bottomed out at around $8. And since then, Solana looks like it's up over 2,500%. That's a 25x. It's like turning $1,000 into over $25,000. The list goes on and on and on. Our team called Sui, Ondo, and even some of the biggest cult-based meme coins like MOG back in July 20th of 2023, the day that MOG launched. So if you want to learn how our team is finding these altcoins before they explode, we just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University through the link below. And although we make no guarantees because crypto is definitely risky, guys, this is only $97 a month or $970 a year. If you want to save $194, getting 2 months for free and unlock some exclusive bonuses, just go through the link in the description below, get in right now, watch the 26-minute video covering everything that Altcoin Pro University offers to help you become the first millionaire in your family tree, if that's a goal of yours. And you can get started through the link in the description below right now, or you can go to bullrunners.com to take advantage of the bonuses we're giving you before they expire. Everyone is loving the community. They're loving the education. They're getting access to real-time altcoin picks first before we ever make videos about them. So click the link in the description below, watch the video, and I'll see you on the inside.